Not only is Bitcoin the first cryptocurrency, but it's also the best known of the more than 5,000 cryptocurrencies in existence today. Financial media eagerly covers each new dramatic high and stomach churning decline, making Bitcoin an inescapable part of the landscape. While the wild volatility might produce great headlines, it hardly makes Bitcoin the best choice for novice investors or people looking for a stable store of value. Understanding the ins and outs can be tricky. Let's take a closer look at how Bitcoin works. What is Bitcoin? Bitcoin is a decentralized digital currency that you can buy, sell, and exchange directly without an intermediary like a bank. Bitcoin's creator, Satoshi Nakamoto, originally described the need for an electronic payment system based on cryptographic proof instead of trust. Each and every Bitcoin transaction that's ever been made exists on a public ledger accessible to everyone, making transactions hard to reverse and difficult to fake. That's by design. Core to their decentralized nature, Bitcoins aren't backed by the government or any issuing institution, and there's nothing to guarantee their value besides the proof baked in the heart of the system. The reason why it's worth money is simply because we, as people, decided it has value, same as gold, says Anton Moscovoy, co-founder and CEO of digital financial service company Holyheld. Since its public launch in 2009, Bitcoin has risen dramatically in value, although it once sold for under $150 per coin. As of October 26, 2021, one Bitcoin now sells for more than $62,000 because its supply is limited to 21 million coins. Many expect its price to only keep rising as time goes on, especially as more large institutional investors begin treating it as a sort of digital gold to hedge against market volatility and inflation. How does Bitcoin work? Bitcoin is built on a distributed digital record called a blockchain. As the name implies, blockchain is a linked body of data made up of units called blocks that contain information about each and every transaction, including date and time, total value, buyer and seller, and a unique identifying code for each exchange. Entries are strung together in chronological order, creating a digital chain of blocks. Once a block is added to the blockchain, it becomes accessible to anyone who wishes to view it, acting as a public ledger of cryptocurrency transactions, says Stacy Harris, consultant for Pelicoin, a network of cryptocurrency ATMs. Blockchain is decentralized, which means it's not controlled by any one organization. It's like a Google Doc that anyone can work on, says Bachai Okoro, CEO and co-founder of African cryptocurrency exchange Quidex. Nobody owns it, but anyone who has a link can contribute to it, and as different people update it, your copy also gets updated. While the idea that anyone can edit the blockchain might sound risky, it's actually what makes Bitcoin trustworthy and secure. To add a block of transactions to the Bitcoin blockchain, it must be validated by a majority of all Bitcoin holders, and the unique code used to identify the user's wallet and transaction is the correct cipher, must comply with the conversion pattern. These codes are long random numbers and are very difficult to generate illegally. According to Brian Lottie of Crypto Aquarium, scammers who guess the key code of a Bitcoin wallet have almost the same odds as those who win the Powerball lottery 9 times in a row. This level of statistical randomness of the blockchain validation code required for each transaction greatly reduces the risk of someone being able to execute a fraudulent Bitcoin transaction. How does Bitcoin mining work? Bitcoin mining is the process of adding new transactions to the Bitcoin blockchain. It's a tough job. Those who choose to mine Bitcoin use a process called proof of work. In this process, you use a computer in the race to solve a math puzzle that validates a transaction. To solve the puzzle and tempt the miners to continue the race to support the entire system, the Bitcoin code will provide the miners with new Bitcoins. This is how to create a new coin, says Okoro, adding a new transaction to the blockchain. In the early days of it was possible for the average person to mine Bitcoin, but it is no longer the case. Bitcoin codes are written to make solving puzzles more and more difficult over time and require more and more computing resources. Today, successful Bitcoin mining requires access to powerful computers and large amounts of cheap electricity. Bitcoin mining is also cheaper than before, making it even more difficult to recoup the rising costs of computing and electricity. When this technology first appeared in 2009, every time we got a stamp, we got a lot more Bitcoin than we do today, said Flory Marquez, co-founder of crypto asset management company BlockFi, says there are more and more transactions. The amount you get paid for each stamp is less and less. By 2140, it's estimated all bitcoins will have entered circulation, meaning mining will release no new coins, and miners may instead have to rely on transaction fees. How to use Bitcoin in the US? Human beings commonly use Bitcoin as an opportunity funding, supporting diversify a portfolio other than shares and bonds. You also can use Bitcoin to make purchases. However, the wide variety of carriers that take delivery of the cryptocurrency continues to be limited. Big organizations that take delivery of Bitcoin encompass Microsoft, PayPal, and Whole Foods, to call simplest a few. You might also discover that a few small neighborhood outlets or positive websites take Bitcoin. However, you should perform a little digging. You also can use a provider that lets in you to attach a debit card in your crypto account. That means you could use Bitcoin the equal manner you'd use a credit score card. This additionally commonly includes a monetary company immediately changing your Bitcoin into dollars. Crypto.com and CoinZoom are offerings which have law with inside the US. First Viscount Montgomery of Alamein says, in different nations, mainly people with much less strong currencies, human beings every so often use cryptocurrency in preference to their very own forks. Bitcoin offers an possibility for human beings to save fee without counting on a forks. This is subsidized with the aid of using a government. First Viscount Montgomery of Alamein says, it offers human beings a choice to hedge for a worst case scenario. You're already seeing human beings in nations like Venezuela, Argentina, Zimbabwe, and nations closely in debt. Bitcoin is getting outstanding traction. That said, while you operate Bitcoin is a fox, now no longer in funding with inside the US, you do should be aware about positive tax implications. How to buy Bitcoin? Most human beings purchase Bitcoin through cryptocurrency exchanges. Exchanges permit you to shop for, promote and maintain cryptocurrency, and putting in place an account is much like beginning a brokerage account. You'll want to confirm your identification and offer a few type of investment source, which includes a financial institution account or debit card. Major exchanges encompass Coinbase, Kraken, and Gemini. You also can purchase Bitcoin at a web broking like Robinhood. Regardless of in which you purchase your Bitcoin, you'll want a Bitcoin pockets wherein to save it. This is probably what's referred to as a warm pockets or a chilly pockets. A warm pockets is saved with the aid of using an alternate or a company with inside the cloud. Providers of online wallets encompass Exodus, Electrum, and Mycelium. A bloodless pockets is an offline tool used to save Bitcoin and isn't always related to the internet. Some cellular pockets alternatives encompass Trezor and Ledger. A few essential notes approximately shopping for Bitcoin. While Bitcoin is expensive, you could purchase fractional Bitcoin from a few carriers. You'll additionally want to appearance out for charges, which can be commonly small possibilities of your crypto transaction quantity, however, can clearly upload upon small greenback purchases. Finally, be conscious that Bitcoin purchases aren't immediately like many different fairness purchases reputedly are. Because Bitcoin transactions need to be tested with the aid of using miners, it can take you at the least 10 to 20 minutes to pair your Bitcoin buy to your account. How to invest in Bitcoin? Like a stock, you could purchase and maintain Bitcoin as in funding. You may even now accomplish that in unique retirement money or referred to as Bitcoin IRAs. No account in which you pick out to maintain your Bitcoin. Human beings' philosophies on a way to make investments it vary. Some purchase and maintain lengthy time period. A few purchase in purpose to promote after a rate rally, and others wager on its rate decreasing. Bitcoin's rate over the years has scaled huge rate swings, going as low as $5.165 and as excessive as $28,990 in 2020 alone. I suppose in a few places, human beings is probably the use of Bitcoin to pay for things. However, the fact is that it's an asset that seems like it's going to be growing in fee distinctly speedy for a few time. Marquez says, so why might you promote something that's going to be really well worth a lot greater subsequent 12 months than its miles today? The majority of human beings that maintain it are lengthy time period traders. Consumers also can spend money on a Bitcoin mutual fund with the aid of using shopping for stocks of the Grayscale Bitcoin Trust. 11 though it's presently simplest open to accepted traders who make at the least $200,000 or have internet worths of at the least $1 million. This way the bulk of Americans aren't kept in a position to shop for into it. In Canada, however, varied Bitcoin making an investment is turning into greater accessible. In February 2021, purpose Bitcoin ETF commenced buying and selling because the world's first Bitcoin ETF and the evolved Bitcoin ETF has additionally been authorized with the aid of using the Ontario